Nancy retired at 66 with her house paid off. No mortgage. Just property taxes and insurance. She thought her housing costs were essentially fixed. In 2018, her property taxes were $4,200 per year. Her homeowner's insurance was $1,800 per year. By 2024, her property taxes had risen to $7,400. Her homeowner's insurance had risen to $4,600. Her roof needed replacement. $18,000. Her HVAC system failed. $9,000. In 6 years, her annual housing costs had nearly doubled. On a fixed retirement income, that hadn't changed. Nancy had planned carefully. She had never planned for this. In this video, I'm going to show you 3 things. First, the housing costs that are rising fastest for retirees right now, including costs most retirement planning completely ignores. Second, the 2 groups of retirees most financially exposed to housing cost increases, and why their situations are fundamentally different. Third, the housing decisions made before retirement that determine how much financial exposure a retiree faces, and when it's still possible to change the outcome. But here's the warning. The second group, the renters, face a situation that is in some ways more precarious than the homeowners. And it's almost never discussed in retirement planning content. Stay with me through all 3. Before I show you the rising housing costs, I need to tell you about Frank. Because Frank's situation illustrates something that most retirement planning never addresses, and that affects millions of people approaching retirement right now. Frank rented his whole life. He moved often for work, never stayed in one place long enough, or had the down payment, or the credit, to buy a home. He arrived at 65 with adequate savings, a reasonable Social Security benefit, and a rental apartment. In 2019, his rent was $1,400 per month. By 2024, his rent was $2,200 per month. A 57% increase in 5 years. His Social Security COLA adjustments over the same period had increased his benefit by approximately 23%. His housing cost had risen more than twice as fast as his income adjustment. Frank had enough to retire in 2019. By 2024, he was reassessing whether he could afford to stay in his apartment. At 70. This is the housing crisis affecting retirees that almost nobody discusses. The renters who planned adequately for retirement, based on housing costs that no longer exist. Here are the specific housing costs that are rising fastest. Property taxes. In many markets, rising significantly faster than general inflation as home values have increased. Homeowners insurance. Rising dramatically in many regions due to climate-related claims. In some states, rising 30% to 50% in single years. Rent. As documented by Frank's situation, rising faster than Social Security adjustments in most major markets. Maintenance and repairs on aging homes with aging owners, often requiring professional help for tasks previously done personally. Here's the twist that makes the renter situation particularly precarious. Homeowners face rising costs, but they also hold an appreciating asset that has grown in value as housing prices rose. Renters face rising costs without the offsetting asset appreciation. They pay more every year, with no equity building, and no asset to draw on if needed. Frank's housing costs doubled. His savings didn't grow correspondingly. Because the market that drove rents up required ownership to benefit from. Now the housing decisions that matter most. Before retirement begins. Because most of the housing exposure retirees face is determined by decisions made years before they retire. Decision 1. Mortgage payoff timing. Entering retirement with a paid-off home eliminates the largest single housing cost and provides significant inflation protection. Because mortgage payments don't inflate. Entering retirement with a significant mortgage creates a large fixed obligation on a potentially declining income. Decision 2. Downsizing before retirement. Most people who downsize do so reactively. After health events. After a spouse dies. After financial pressure builds. The people who downsize proactively before retirement often free up significant equity, reduce ongoing housing costs substantially, and make the move while they have the energy and choice to do it well, rather than under pressure. Decision 3. Location considerations. Property taxes. Insurance costs. Maintenance costs. All vary dramatically by geography. A planned move to a lower-cost state or region before retirement can reduce annual housing costs by thousands of dollars. A decision that becomes harder to make after retirement has already begun. Here's the most important twist. The retirees with the most housing security are not necessarily the ones who own the most valuable homes. They're the ones who own modest homes in reasonable cost areas, without mortgages, with maintenance reserves, and with a plan for eventual downsizing when ownership becomes burdensome. Now the honest comparison. Renting versus owning in retirement. Because this is a question more retirees are facing as housing costs on both sides continue rising. Owning advantages in retirement: no landlord risk, no lease renewal uncertainty. Mortgage-free means housing cost stability. Equity as a financial resource if needed. Reverse mortgage as a last resort option. Owning disadvantages in retirement: maintenance responsibility falls entirely on the owner. Property taxes and insurance continue rising. Home equity is illiquid until sold or borrowed against. Physical maintenance becomes harder with age. Renting advantages in retirement: flexibility to relocate as needs change. No maintenance responsibility. Capital that would be in home equity can be invested. Renting disadvantages in retirement: no control over rent increases. No equity building. Landlord decisions can disrupt housing stability. Rental housing markets in many areas have become less stable. Here's the most important twist. Neither is universally better. For someone in excellent health planning to stay in one place. Ownership with a paid-off home often provides the most stability. For someone with health uncertainty or wanting geographic flexibility, renting with adequate savings may be more appropriate. The right answer depends entirely on individual circumstances, not on generic advice. Nancy's annual housing costs nearly doubled in 6 years. On a fixed retirement income, Frank's rent rose 57% in 5 years, faster than his income adjustment could keep pace with. Both planned carefully. Neither planned for what actually happened to housing costs. This video just opened a window for you. You've seen the housing costs rising fastest. The two groups most exposed. and the decisions that determine housing security in retirement. What you do with that window is completely yours, because everyone's situation is different. One question before you go: is your retirement plan built around housing costs from 5 years ago? Or housing costs from today? Drop it in the comments. I read every single one. Next week: how to actually inflation-proof your savings. Not the generic advice. What actually works, based on what financially resilient households consistently do. Subscribe. Hit the bell, because that video is the practical follow-up to everything in this series. See you next week. Educational content only, not financial advice. Always consult qualified financial and real estate professionals.